Albert Einstein is reputed to have said, "The hardest thing in the world to understand is the income tax." Proper tax planning is not something that one can really do when you submit your tax return. I would also not advise you to do it all on your own. People who really save a lot of tax are those who consider the tax consequences of every transaction or investment they make. It is a continuous process, and the help of a knowledgeable tax advisor can really save you a lot of money.
Dealing with personal taxes can be a complex process, but here are some general steps you can take to stay on top of your tax obligations. Number 1, consult with a tax professional. Consult with a tax professional who can provide advice and guidance on your specific tax situation. Alternatively, you can use tax software which can help you calculate your taxes and identify potential deductions and credits. Our recommendation is that you build a personal relationship with a tax professional who will help you plan and execute a set strategy reviewed yearly.
Number 2, financial needs analysis. It's important to do professional tax structuring and a financial needs analysis in preparation for a tax year. With this holistic approach, you can reduce your tax burden and ensure you utilize all your tax benefits. It also allows you to save you money on your insurance and taxes and gives you the peace of mind that your financial needs are addressed, particularly when planned or unplanned life events occur.
Number 3, keep track and gather all information on your income and expenses. Keep accurate records of your income and tax-deductible expenses throughout the year and collect all the necessary tax documents such as tax certificates for your retirement annuity contribution and receipts. Now, this will help you calculate your taxable income accurately and identify potential deductions and credits. Number 4, stick to the deadlines. File your tax return and pay your taxes owed before the deadline. This will avoid unnecessary penalties and interest charges. Number 5, keep copies of your tax returns and supporting documents. Always keep copies of your tax returns and supporting documents for at least 5 years from the date of submission of the return, as the tax authorities may request them for a review or audit. Submitting your tax return is not enough. If you follow these steps, you can stay on top of your personal tax obligations and avoid any penalties or interest charges.
Before we move on, let's discuss 2 top tax tips. Number 1, retirement funding. Making investments with after-tax income when you can make the same investment and get a tax benefit doesn't make sense. You should use your full retirement amount that is tax deductible every year. The positive effects of this saving become apparent after a couple of years.
Number 2, tax compliance. It pays to have your tax returns correctly and completely submitted every year. SARS has become a much more professional organization and they are becoming more efficient every year as their collection targets increase. The interest and penalties you possibly face if you do not adhere to their requirements are hefty, and it therefore makes sense to pay exactly what you owe when you owe. There is no prohibition in South African tax law on minimizing your tax burden. So make sure you do this where possible along with your selected tax practitioner.